Look at some more movers and shakers in the mid-cap market. You have gains on Reliance Nippon Asset Management. That's a stock that's on the upside today. First Source is finding some buyers as well. So those are some of the names. Overall, of course, the market is subdued. Watch out for Godrej Properties. This is another second very strong day for Godrej Properties. The volumes are also a lot stronger on this stock. Couple of brokerage notes that came out after the GST announcements yesterday. Now that companies have two options, whether they want to move to the lower tax without input tax credit or the higher tax rate. Some of the brokerages feel that Godrej is going to be a key beneficiary of this flexibility that has been allowed. We will discuss that with the fundamental experts in just a bit. But right now, let's also get you some more trading ideas. Sandeep Wagle is with us. Good afternoon, Sandeep, and happy Holi to you. What trades are you going with before you get down to the Holi holiday?
Thanks, Surabhi. Good afternoon. Happy Holi to all of you. I would go with a buy in India Bulls Housing Finance, stop loss of 725, target of 765, and a sell in a Coal India, stop loss of 243, target 228.
Okay, fair enough. Sandeep, thanks a lot for those trading ideas. By the way, don't lose sight of SpiceJet as well. For now, I mean, Interglobe, of course, is the top gainer, 6.5%, but even SpiceJet is the one which is now up about 8.7%. Couple of other stocks which are looking interesting right now. Canfin Homes is up a bit. Apollo Hospitals, it's cooled off a bit from the highest point, but that stock's had a good run. And Bata is making a bit of a comeback once again. It never cooled off, but whatever little profit taking there was, that's making another attempt. So 1352 is what you have on the Nifty or on the Bata stock at this point in time. Move also in Hindalco. Mr. Wilson, how do you approach a stock like Hindalco from here on? It's almost a forgotten stock now.
Anuj, I don't think that you should have any problem in taking a investment call on this, because if you really see the Novelis smart turnaround in this last maybe 1 year, in fact they struggled exactly for 1 decade after having acquired for 6.2 billion in 2007-8, So after 10 years, the turnaround in the Novelis and the operations at the domestic level, on the both copper smelter and the aluminium seem to be doing quite well. And their second acquisition of Aleris is also seen to be very much on track, which they should be able to complete in maybe next 6 to 8 months. But metal always have its own problem, they never, because Hindalco, which used to carry the premium about 1 decade back, I remember at that time at maybe about 1 decade back, it used to have a P multiple of 20. But after Novelis having acquired, they lost that premium valuations because of the, and even today the Novelis EBITDA seem to be much lower, maybe in the single digit 9 to 11% against their domestic EBITDA of 18 to 20% on the aluminium and copper smelter front. But yes, in spite of that, if you want to have a non-ferrous metal stock in your portfolio, I don't think that Hindalco is a bad choice, given amongst the, though our pecking order have first preference for Hindustan Zinc, followed by Hindalco, and then Vedanta, and then Nalco.
Okay, so that's a call on a couple of metal stocks. Merabun, I'm going back to the stock I just referred to, Godrej Properties. Let's get today's intraday up and also a 1-year chart up, because it's been an interesting journey for this stock. Now it's just about 10% away, by the way, from 10 to 12% away from its all-time highs, from its 52-week highs. It's gone back to the levels of, 795 thereabouts. Last time we were here around May, 900 plus, just above 900 is the 52-week high. Now, Merabun, whatever we've heard yesterday, is this just a temporary reaction that's playing out last 2-3 days on Godrej? Or is this perhaps a potential portfolio stock?
There has been a complete shift in the way I think the market men have started looking at the real estate space. I think while risk still linger, I think there is enough scope to play a risk on trade as far as real estate sector goes in general. The reason is very simple, that valuations have become too demanding. Number 2, interest rate cycle is still pointing down. Number 3, the recent changes which have happened as far as the tax structure goes has gone in favor to some extent as far as real estate players goes. And 4th, the most important thing which I give it the maximum percentage marks is that it's absolutely under-owned. You ask 10 investors around you and all 10 will say they don't have a real estate stock in their portfolio. When there is a shift in the way people look, the stocks tend to make a very quick, sharp up move. The point is, amongst them, what do I buy? If I want to have some real estate stock in my portfolio, I think Godrej Property stands out. Though I have a little bit of reservation at the present level in terms of the valuation, and relatively I think, while I rate Godrej Property as one of the cleanest players in the real estate space, in terms of valuation, I think I would possibly prefer over a realty from the stock market angle, and maybe smaller players like Prestige Estates. I think there is an opportunity definitely, and I personally also am looking a little bit favorably as far as real estate sector goes, because this is a sector which I have shunned, which I have ignored for the last many years. But I think at the present level, because it's underowned and because the valuations are absolutely undemanding, I think there is reason why one should be looking at this space a little bit favorably now.
Okay, Mr. Sen, Motherson Sumi is correcting again. Is this a good buying opportunity?
Anuj, if you want to have 1 year view, then definitely maybe a level of about 150, 152 is looking to be very, very attractive entry level.
Oh yes, a bit of a slip because of that BMW statement, but honestly should not matter too much. The stocks already, last time also bottomed out somewhere around this zone, so that's fallen a bit, but at lower level there is a bit of a buying. Mr. Sen, thanks a lot for joining us. Have a good Holi, and of course we'll talk to you after that. Merbun, before we thank you, interesting stock idea, Take Solutions.
Well, I think the stock has seen a high of 310, is now nearly at its 52-week low, and I think not many people have tried to understand this company. Is it a pharma company? Is it an IT company? I think this is a domain-centric business technology company. I think it has sold off certain businesses of its, and right now it is concentrating mainly on the life sciences business. I think it has got its presence in US, Europe and Asia. The problem which has happened as far as the stock goes, and the stock is available near its 52-week low, is very simple. The last quarter results disappointed as far as the margins goes. But this has got largely to do with a little bit of forex loss and a little bit of other income coming down as compared to what was expected. The company has made a whole lot of acquisitions in the recent past, including one in America called a company called Kai Corporation, which is giving it an entry in the US clinical science market. So that is one space which Take was not there. I think it's a huge company, and the entire acquisitions which it has made in the recent past should start yielding returns by 2019-20. They have a little bit of a cash flow problem in the recent past, which also should be taken care of. And a large part of this acquisitions has been funded by a preferential issue which the promoters gave to themselves at a price of 170 rupees per share a year ago, which is 50% higher than the present market price. I expect the company to report an earnings of around 13 rupees in the current financial year, and we should scale up at least to 17 to 18 rupees next year. Now at 17 to 18 rupees, you are getting this share at a valuation of just 7 or 7.5 times as far as PE ratio goes. If you compare it to its peers across the world and India included, I think the valuations normally range between 20 to 30 for companies of the type of Take Solutions. So I think this is a stock in which there is absolutely no downside risk, and if a person is ready to play for the longer term, my conviction makes me feel this company is something which everybody will be talking about possibly over the next 1.5 years when the acquisitions start playing itself out and the numbers start swelling over the next 2 years. So somebody is patient enough, this stock could even possibly give a 100% return from here over the next 1.5, 2 years.
Okay, all right, Merbun, thank you for giving us your take on Take Solutions and also all the other stocks that we have discussed today. Thanks very much for joining in. You have a great midweek break as well, and we will connect with you again on the markets. Well, on that note, it's time to say hello to our Alpha Manager of the Day, Anand Shah, Deputy Head of Investments at BNP Paribas Mutual Fund, now joins in. Anand, first of all, very happy Holi to you as well. Welcome break for all of us in the middle of the week. First things first, I mean, the spirits are high. I think it's very colorful considering how the market has moved over the last couple of weeks. So, yes, we are inching in close to all-time highs this Holi. The question is, do you think those levels will be taken out? And more importantly, do you see these levels in this move sustaining?
Hi, very good afternoon, and yes, wish a very, very happy Holi to you and your viewers too. Yeah, indeed, it's a very colorful as it looks today. And coming to the markets, I think a lot of this rally has to do with, you know, what's happened, especially with the US Fed and where they have taken a pause. I think...
Anand, just hold on, I'll come back to you in a bit. There's big news coming in from our sister network. Nirav Modi is arrested in London. That's a big news. Let's just pull out PNB's chart intraday. That's the stock which really is the most impacted. Just see the stock. That's PNB. That's big news coming in right now. Any more details, Surabhi, right now?
Well, all I know is that there was obviously an arrest warrant that was handed out by the UK police. He had been spotted earlier this month as well in the UK, and that's the only first information that's available as of now. It seems it's the UK police, the London police, that has managed to arrest Nirav Modi. Now, we'll have to see how sort of the process plays out from here with respect to his extradition, and how the law ultimately takes its course. But the fact that there is an arrest, I guess, that is going to be seen as a huge win for India. And then obviously the bigger task of making sure that he gets back, and then there is a logical trial that takes place over here. But those are the details. In fact, maybe we can cut across to our sister network if there are any more details available at the moment. No, I don't think we have that. So as of now, first information coming in, that's the arrest of Nirav Modi. We've got our eye on that story. More coming up as the details unfold. But Anand, sorry we had to cut you short over there. This was a big development. But to get back to your point, sustainability of this market rally.
I think, yeah, that's what I was saying. Maybe we are a little 24 hours too early. We will have an FOMC meeting. And yes, the expectation is that the pause will continue and they ain't going to be hawkish in a hurry, given there is an overall slowdown, global growth slowdown. So I think to that extent, one part of the equation, which is the global liquidity, remains intact as we speak today. Okay. But we'll know more tomorrow.
Okay. Anand, hi, good afternoon. So I mean, in a sense that, the market's seen such a big rally in a, about a 12 or 13-day period. You've seen many market cycles. Is this, start of a fresh bull market, or is this because the market was so oversold, especially in the broader market, that it's just a massive relief run on the other side?
I think it's been almost 2 years that emerging markets in general were sort of facing challenges with the rates going up in US and dollar strengthening. So to that extent, the January pause and the subsequent commentary coming from US has definitely helped all the emerging markets. So actually India has been late. Frankly speaking, YTD, if you see, most of the emerging markets are up between 7% to as high as 25%. We've been doing nothing till 15 days back. So we are just playing a catch up as far as returns in YTD concerned. Nevertheless, over a 1 year, India is in line with the other emerging markets. But yes, it's been sort of a relief rally from the 2 years of sustained increase in rates in the US Fed, leading to money flowing back into US and dollar strengthening. So to that extent, it's been a relief rally from a 2-year-long rate hikes.
Okay, so Anand, now the point is, from here on, considering we are at these elevated levels, what should the portfolio strategy be? Because on one hand, there's this raging debate about an apparent slowdown in the economy. Look at auto sales. Today we were speaking to Bajaj Auto, 100 days of inventory. That's what Mr. Rajiv Bajaj told us. So those are genuine economic concerns playing out. And then you have a market at elevated levels. What should the portfolio strategy be?
I think we will have to be selective, and notwithstanding the near-term challenges on the economy, we also at one end know that there has been a significant spending going on from the social sector perspective, from government's perspective, run up to the election, but also on the infrastructure. So as we see into the earnings, frankly, we don't see too much of pessimism when we see FY20, FY21 earnings, especially led by corporate banks. But to overall say that, we're not finding growth in the markets, that's not true. There are selective challenges, but, that's been the case for the last 4 years. Through the last 4 years, initially it was commodity producers in 2013-14 which suffered from a price crash of oil and metals. Then you had corporate banks which suffered almost for 1.5 to 2 years, going all the way till last year because of the asset quality review and subsequent NPAs. So yes, there are pockets where even you talk of auto today, we had a big liquidity crisis in NBFCs, which sort of impacted auto sales to some extent, but also this 3-year insurance, which is an added cost at the time when there has been slowdown, has further added the agony. But I think this will also pass. We are seeing quite an upbeat expectation from both consumption space, but more importantly from the rural consumption space. So we believe it's more cyclical rather than structural. And to that extent, I think the earnings is what will be the focus post-elections, and that's where we will find pockets of good opportunities to invest into.
Fair enough. By the way, the other stock that would be in focus, apart from PNB, is Allahabad Bank. There were two banks which were defrauded the most. Of course, PNB was the one, and there was Allahabad Bank as well. And that stock also now beginning to make a move. Still in the red, but it won't surprise me if that also moves into the green, and quite a bit, because that was also one, the other bank where there was this Nirav Modi fraud, PNB and Allahabad Bank, and both beginning to see quite a bit of move. So, in fact, this is a big move happening now in both these PSU banks. There's quite a bit of fall in both of these after that fraud was unearthed, and now you're seeing a big rally play out in both these names. So, Anand, from here on going forward, what to your mind would be the biggest risk for this market?
I think the key risks around obviously is crude. Crude in the near term will always remain a sort of a showstopper every now and then when we have a sharp rally in crude, and that's what happened in the month of January when the other emerging markets were actually rallying. India suffered because of a rapid rise in the crude price. So that remains one risk. The other risk being US Fed, and if at all they change their stance, that's also a risk to the markets, not as much to the Indian economy, but that remains a sort of a risk to the markets. And last but not the least is we are entering into a phase where we will have a general elections, panning across 5 weeks, and it adds to its own uncertainty. And to that extent, it can be an upside risk, it can be downside risk also, but suffice to say that it will also lead to certain sort of volatility into the markets over next 3 to 4 months.
Anand, going through some of the funds, I did notice that you have more of the staples in the portfolio. There are stocks like Asian Paints, there's Nestle I saw, and I think the large cap fund as well. There's also Asian Paints. I didn't see too many discretionary consumer names out there, at least in the key holdings. Now, is that the call, that you are more comfortable holding staples and you stay away from discretionary? And where in this entire puzzle does auto really fit in, if at all? I didn't see too many auto names, actually, to be honest, in the top 10.
Yeah, indeed. So I think we did have an underweight positions on auto. So within discretionary, auto is a very large space. But if you see beyond autos, the discretionary, be it airlines or be it multiplexes and the entertainment, that's a space we still continue to like. So overall, our largest overweight and our largest positions are in the financials, followed by consumers, within which staples continue to remain sort of a defensive in terms of earnings growth rate, and that's what we like. But we also like selectively discretionary spend, given the urban consumption is also looking up.
All right, Anand, we leave it there today. Thanks a lot for joining us. That's a view from BNP Paribas Mutual Fund. The market is not moving too much. The weekly options expiry, 11,531 on the Nifty, 29,835 on the Bank Nifty. So that's the only update. PNB has moved to the high point of the day and 3.5% higher on that stock. So that's a big surge happening. And of course, Allahabad Bank as well. So these are the two stocks which have bounced back the most from the low point. By the way, look at the move again on SpiceJet. Just pull out that stock once again. It was up 8% when we spotted that first. It's now 16% on the stock. So looking quite big.